A young and growing population, increasing per capita income, rising aspiration levels. Looks like all roads literally are leading to an opportunity in the Indian automotive sector. Why, you ask? Well, for one, in terms of domestic sales, India is the fourth largest automobile market in the world. We are the largest tractor producer, the second largest two-wheeler maker and also bus manufacturer, and third largest in heavy truck manufacturing. Despite all these impressive statistics, our market is underpenetrated. Did you know that for every 1,000 Indians, there are only 34 four-wheelers purchased? Compare this to 860 in the US, 612 in Japan, and even a smaller country like Indonesia, the number is higher at 78. Look at two-wheelers. For every 1,000 Indians, we have only 120 units bought. In Indonesia, by comparison, 460 units are purchased for every 1,000 people living there. So in a growing and progressive economy, the headroom for increasing sales is quite large, especially given the increase in India's per capita income. In fact, our per capita income has been increasing at a faster clip than the rise in two or four-wheeler prices. When I say auto sector, don't just think of vehicles or automobiles literally. There is a thriving ancillary sector in India as well. Think auto parts, component manufacturers, tires, batteries, seats, lighting, switchgear, and what not. Plus, there is the whole EV, electric vehicles ecosystem. So add technology companies to this mix as well. Today, India is home to a dynamic and evolving EV market, and the government is facilitating this growth. The GST rate for EVs is at 5%, compared to 28% for regular vehicles. 10,000 crore rupees of subsidies have been given under a policy called FAME, Faster Adoption and Manufacturing of Hybrid and Electric Vehicles in India. Production-linked incentives, PLI, have also been given along with lower custom duties, and penetration is picking up. As of today, every second three-wheeler or auto is now an e-rickshaw. Electric passenger vehicle sales have also risen 10 times in the last 4 years. India is also a big exporter of automobiles and parts. Two-wheeler exports now total nearly 28,000 crores, a compounded annual growth of 13% over the last 10 years. And exports is a big opportunity across the industry. As a percentage of sales, it has been steadily growing at 8 to 21%. Introducing the SBI Automotive Opportunities Fund, an actively managed thematic fund which will cover the wider auto universe and aim to maximize value through active stock selection.
Our universe, the way we have computed, comprises of 134 stocks. 20 of them are original equipment manufacturers, and greater than 100 are the auto component players, where we see diversified high growth opportunities in general. Our stock selection strategy will comprise of a top-down approach to select the right economic trends and the growth trajectory of the various subsegments. It will also encompass a bottom-up approach to select companies which have a high growth potential, companies which have strong brand building capabilities, as well as the ability to adapt to the evolving landscape in the automotive space, which is changing at a very fast clip, along with the basic hygiene factors like good earnings quality, good cash flows, as well as decent return profiles.
The auto sector is also a great way to ride the manufacturing wave. Today, manufacturing accounts for 17% of our GDP, and the government aims to increase this to 25%. Within this pie, the dominant player is the auto industry. So altogether, it accounts for 7% of India's GDP.
The automotive sector is an excellent way of playing the growth story in India. And the two factors that appeal the most to us are the underpenetration as well as the affordability factor. When we look at across vehicle categories, the penetration levels is much lower in India versus other geographies, and a comparison that we did with countries like China and South Korea indicate that India today is where these countries were just prior to the hypergrowth phase. To kind of give an example out here, between 1985 to 1996, the South Korea passenger vehicle market grew at 18% CAGR, and at the start, their per capita income was $2,500, almost equal to where India is today. The second factor, as I mentioned, is on affordability. When we look at the per capita disposable income growth over the last 10 years, it has been higher than the average selling price of a passenger car or a two-wheeler, which just indicates that the affordability factor today is better than what it is in the past, allowing consumers to uptrend their vehicle purchase, as well as the original equipment manufacturers to do business on the premiumization side.
If you're an investor seeking to incrementally allocate to growth opportunities within your overall equity portfolio or capitalize on the long-term Indian growth story, then this could well be the fund for you. You can start your investment in the SBI Automotive Opportunities Fund with a monthly SIP of 500 rupees and a minimum lump sum application of 5,000 rupees. Do contact your investment advisor or mutual fund distributor for more information on this fund. Thanks for watching and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.